This week, Bitwise CEO Hunter Horsley argued that the 4-year crypto cycle is over, and Fundstrat's Tom Lee made the same argument, saying that the classic 4-year Bitcoin cycle is dead. What is your reaction to that? Do you agree?
Yeah, I think that the 4-year cycles are based on the Bitcoin halving, and the Bitcoin halving was really important for the first 12 years of the asset because we were cutting the amount of Bitcoin that was being cut from the supply was very material, relevant relative to the demand in the market. But right now you're seeing days when Bitcoin trades $50 billion or $100 billion in a single day. The total amount of the halving in the next halving is going to be 225 Bitcoin. So 225 Bitcoin times even 100,000 of coins, it's $20 million a day is the impact of the halving. And so $20 million isn't a first order impact on a $50 billion a day liquidity. It's not even a second order impact. It's probably a third order issue. The primary drivers of Bitcoin right now are the structural developments in the market. For example, if the banks extend $50 billion worth of credit, right, that dwarfs 20 million a day in the halving. And then when the SEC loosened the restrictions on derivatives trading on IBIT, the open interest in IBIT went from 10 billion to 50 billion in a few weeks. So you're talking about tens of billions of dollars of demand for the asset based upon the embrace of the traditional finance establishment. And so the asset class is being driven by the structure of support in the banking industry and in finance, and a few regulatory changes that are actually enhancing that support for the asset.
Call you the OG. Back in 2020, Strategy made its first Bitcoin purchase, more than 21,000 Bitcoin for a total of about $250 million, I believe. And ever since then, other companies started to follow suit, but we saw this acceleration of DATs, especially this year. And so I'm wondering, do you view these digital asset companies as competition? Are you fazed by this at all? Obviously, you have a massive head start. Or do you see all the copycats as a form of flattery?
Yeah, well, you're right. We were the first, and then there were a handful, and then about a year ago there were 60, and then there were 120, then 180, and now there's more than 200. Generally, I'm a big proponent of any company holding Bitcoin as digital capital on its balance sheet. I think that's good for the company, and that's good for Bitcoin, that's good for the crypto economy. Our business has evolved from a company that simply owns Bitcoin to a company that issues digital credit against the underlying Bitcoin. So today we're the largest issuer of digital credit in the world. If thousands or tens of thousands of other companies buy Bitcoin, that will be good for Bitcoin and good for our business, so it's helpful. Out of those 250 crypto asset companies or crypto treasury companies, only a couple are in the business of issuing digital credit. Examples would be Strive, that issued a treasury credit instrument about a month ago, and then Metaplanet, the biggest Bitcoin holder in Japan, that actually just issued their first digital credit instrument. So there's 3 of us that are in the digital credit market. There's probably 200 to 300 that are holders of crypto assets. It's all good for the crypto economy, they'll all benefit. But the exciting thing in the market right now is digital credit.
But why do you think we're seeing so many DATs arise specifically now?
Before November of last year, before the red sweep, there was a lot of uncertainty over the asset class. And so I think a lot of publicly traded companies were afraid to go into space. We have a very supportive administration. The president has designated Bitcoin as digital gold. The Secretary of the Treasury has said we want to be the crypto capital of the world. Donald Trump said we want to be a Bitcoin superpower. So we're the first year of institutional adoption. And in 2025, you got the support of the SEC, the support of the CFTC, the support of the Secretary of the Treasury, the support of the President of the United States. And so normally public companies are very risk averse. And with all of those supportive moves by the administration, combined with the accounting profession rolling out fair value accounting, which was a very big deal. Fair value accounting means that when you generate gains, you're allowed to mark them up on your balance sheet. And before that point, you could only take losses. You could never take gains. So the accounting was reformed, and the regulators began supporting the asset in the year 2025. And I think that once those two things happened, it became pretty clear that it gave a structural competitive advantage to a public company to have Bitcoin on their balance sheet, because Bitcoin has been growing 50% a year for the past 5 years. And so all things considered, if you're buying Bitcoin, you're buying the world's dominant digital monetary network growing 50% a year. And the alternative would be to hold something growing 5% a year.
What's the role for Bitcoin in the financial system?
I think she's alluding to her enthusiasm for digital finance, which is about tokenizing currencies, but I think that they're separate opportunities. People that are excited about stablecoins are focused upon payments technology. How do I move money at the speed of light, or how do I improve the Visa network or the MasterCard network or the traditional banking system using digital technology? The value proposition of Bitcoin is digital capital. It's someone that wants to store their value for the next 30 years. So if you think about it, you don't know of any billionaires that are going to sell everything they own to buy US dollars and put it in a safe. So you don't really have currency. Currency is the dollar competing with capital. Stablecoins are digital currency. It's a different industry. Bitcoin is digital capital. Bitcoin is competing with gold. It's competing with real estate. It's competing with public equity, your Mag 7 stocks or your S&P index, or private equity. And people that have always owned those capital assets in the 20th century, and they're thinking they want to own digital capital. Stable coins, on the other hand, they're competing with traditional credit card networks or traditional banking networks, and they're offering people with digital payments technology all around the world. Ultimately, the big winner in the stablecoin movement is going to be the US dollar, because what it means is that every foreigner will be able to use dollars instead of using pesos, bolivars, rubles, CNY, euros, any African currency, the rand, etc. So the dollar is the winner, the US is the winner. And then the technologists that enable and host those digital dollars, are going to be successful companies.
Bitcoin is going anywhere, but there is that argument that altcoins have no utility and might not stick around. And yet we're seeing all these spot altcoin ETFs arise here in the US. So is there a risk to Wall Street if the tides turn and things change? Also because we're seeing that's associated with altcoins as well arise here in the US.
Well, there's thousands of ETFs and there's tens of thousands of public securities. As I was saying, the distinction here is there's a digital finance economy built around proof of stake networks and all of these altcoins. It's a very competitive business, but it's very exciting. A lot of people are interested in it. It's the networks and the exchanges you'll use to tokenize currencies, to tokenize brands, to launch meme coins, to tokenize securities. That's an evolving business. It's competitive. If you're invested in it, you need to be a sophisticated tech investor to understand it. And the future of that business will be largely determined and channeled by the resolution of the Clarity Act, which is the next big piece of crypto legislation that we expect to come in the first half of 2026 at this point. So it's happening. It's complicated.
Just last month, one example, JP Morgan announced that it plans to allow its institutional clients to use Bitcoin and Ether as collateral in secured loans. Is this something that Strategy might utilize, given you are in fact the largest corporate holder of Bitcoin?
Our business model is to issue the credit. So we're selling public credit like STRC and STRD, STRF, and we've sold about $8 billion of that public credit. So we will issue billions, then tens of billions of dollars of public credit, and our Bitcoin is the collateral backing that credit. So that's our business. I think the formation of bank credit networks around Bitcoin is very auspicious. It's very good for the asset class. If banks would not give you a loan on real estate, your real estate values would be lower. And if banks were unwilling to give a loan on a stock portfolio, then that would impair a lot of people that want to invest in stocks. The banks are moving into offering credit on digital assets and especially on Bitcoin. That will be good for the banks. That will be good for Bitcoin. And it's merely an acknowledgement that there's $2 trillion of wealth that is unbanked right now. And this is the banks beginning to move into this new asset class and provide banking services to the $2 trillion of holders.
What's your outlook for institutional adoption of crypto in 2026?
I think it will continue progressively. I think that there are very positive moves. There's good positive guidance from the banking regulators right now, directing banks to begin to support Bitcoin. There are really good moves from the banks. They've all announced they're going to begin to custody and hold Bitcoin. That helps. I think there's some positive guidance coming from Basel and the Basel working group that they will start to upgrade the collateral value of Bitcoin for bank balance sheets. That will be very helpful. So I think that all of those things will generally accelerate institutional adoption. Every single month that goes by, there are more large institutions that come out in favor of digital assets and Bitcoin in particular. And every single time one of them announces that catalyzes another to consider doing the same.